Should governments regulate venture capital? Hi everyone, today I'd like to discuss an increasingly important issue in entrepreneur finance and innovation policy. Should governments regulate venture capital more aggressively, or should they allow private investors to determine the direction of technological innovation? Over the past several decades, venture capital has become one of the most influential forces in the global economy. Many of today's largest technology companies, including firms in artificial intelligence, biotechnology, fintech, and space technology, were once small startups financed by venture capital. Unlike conventional bank loans, venture capital provides high-risk equity financing to young firms with uncertain prospects but extraordinary growth potential. Without such financing, many transformative innovations might never reach the marketplace. Supporters argue that venture capital corrects an important capital market imperfection. Startups typically possess few tangible assets, limited operating histories, and uncertain future revenues. Consequently, commercial banks are often unwilling to lend to them. Venture capitalists fill this financing gap by accepting substantial risk in exchange for ownership stakes. Their investments allow entrepreneurs to commercialize ideas that traditional financial institutions would reject. Moreover, venture capital contributes more than money. Experienced investors frequently provide strategic guidance, professional networks, managerial expertise, and access to future financing. Economists describe this as value-added intermediation. By actively mentoring entrepreneurs, venture capitalists improve the probability that innovative firms will survive and expand. Supporters also argue that venture capital enhances dynamic efficiency. Many breakthrough technologies require years of experimentation before generating profits. Patient capital enables entrepreneurs to pursue long-term innovation rather than focusing exclusively on short-term financial performance. However, critics contend that venture capital may distort innovation. Because investors seek exceptionally high returns, they often favor technologies capable of rapid global expansion while neglecting socially valuable innovations with lower commercial profitability. For example, startups developing luxury consumer applications may attract abundant financing, whereas firms working on affordable sanitation technologies or neglected tropical diseases may struggle to obtain investment. Another concern involves market concentration. Successful venture capital firms increasingly finance multiple companies within the same technological ecosystem. Over time, this may strengthen the dominance of a relatively small number of investors over emerging industries. Some scholars worry that concentrated financial influence could reduce competition by shaping which innovations receive funding and which ideas never reach consumers. Critics also highlight the growing influence of venture capital on corporate governance. Intense pressure for rapid growth may encourage firms to prioritize market expansion over profitability, labor standards, consumer protection, or ethical considerations. In extreme cases, founders may feel compelled to pursue aggressive business strategies primarily to satisfy investor expectations. In my opinion, venture capital remains indispensable for technological progress and economic dynamism. Nevertheless, governments should establish clear legal frameworks promoting transparency, preventing anti-competitive practices, and protecting investors and consumers. The objective should not be direct private investment, but to ensure that competitive financial markets continue allocating capital efficiently while preserving public trust. Ultimately, innovation depends not only on brilliant ideas but also on institutions capable of financing uncertainty. Venture capital has played a crucial role in transforming scientific discoveries into commercially successful products. The challenge for policymakers is preserving entrepreneurial dynamism while ensuring that financial power remains compatible with competition, accountability, and the broader public interest. So here's my question. Should governments allow venture capital markets to operate with minimal intervention, or should they regulate them more actively to ensure that innovation serves broader social goals? I'd love to hear your thoughts. Thanks for listening. See you next time.